The energy space is always exciting. As the world turns, we're met with new challenges and opportunities daily. Now, for tuning into this, understand that here at Refinitiv, we have our fingers on the pulse of these developments. And from our office in Houston, we're constantly involved with our clients here in the Western Hemisphere. Everyone from the northernmost tip of Canada to the southernmost point of Chile. If you look at the US, the world's largest consumer of oil, I don't want to become too engrossed in COVID-related energy analysis. You can go find that in our podcasts, our webinars, and our reports. It's all out there. What I will say is this. Take a look at the 4-week moving averages of the marquee refined products, the domestic demands. At one point this year, we saw diesel fall to 74% of its 2020 high. Gasoline get crushed to 57% of its 2020 high, and jet to an abysmal 31% of its high. Now look, I acknowledge there's been some recovery here, but in the case of, say, jet, we won't see that returning to normal to previous levels for 1-2 more years. And furthermore, the structural changes that are the result of the shuttered economy are growing more significant. As extended closings have not only put people out of work and affected pocketbooks, it has now led to more and more business closures and economic workings that may take years, if ever, to recover. So jobs have not just been lost, the companies the jobs were lost from have gone away. Coupled that with certainly be a structural change in the way many of us work, business travel losing out to virtual meetings and conferences, permanent work from home arrangements, or even less time in the office, which will mean less commutes, which is not great for transportation fuels. But what's really on our clients' minds, and not just in the Western Hemisphere, not the US, not just Canada, not Mexico, not Brazil, the world is, of course, the US elections. By the time this video is posted, I'm hoping that we'll know who our next president will be for the next 4 years. And also, too, I'm going to acknowledge that we have 35 Senate seats up for grabs, and definitely the outcome there will influence policy going forward. But honing in for a moment to the two presidential candidates' energy policies, their ideas couldn't be more different. We've seen Trump's policies in action, favoring a more traditional energy through relaxation of regulations, infrastructure approvals, lowering of taxes, policies that have benefited traditional oil and gas and put the U.S. at, frankly, more of a competitive level with other global crude oil and refined products producers. These policies are obviously popular with the producers and the pipeline companies and the refiners, but don't support, inter alia, countries that are still adhered to the Paris Agreement. Biden's stated energy ideas center around reinstating environmental regulations, rejoining the Paris Agreement, deploying clean technology, and promoting investment into alternative energy, including through the creation of clean energy jobs. The unstated here is a stark difference, historically in earnings from jobs in the oil and gas sector versus those in renewables. Also, to truly recover from the COVID recession, fossil fuels will continue to play a part, especially given existing infrastructure, which is low cost of high volume transport, and petroleum stature as a feedstock for everything. We think of it often as transportation fuels, sometimes power gen, but petroleum is in clothing and plastics and medical supplies. The energy industry is complex, massive. It's been built up over a long period of time. Regardless, here at Refinitiv, we are analyzing how these policies take shape. We're squaring them with the private sector's policy changes that are happening because of corporate citizenship initiatives and/or investor pressure, and balancing them with the emerging market oil demand, growth, and production. In the case of the Western Hemisphere, new oil in the world market from locales such as Guyana, Brazil, and Argentina. Guyana's economy is set to change significantly because of oil being produced there. We're also looking at issues like how maybe rig count is not a great indicator of how it used to be because of enhanced productivity and better sweet spot identification. We're not just examining flat futures prices in a vacuum. We're pricing individual crudes and products and evaluating how quality differentials, especially given that OPEC barrels have left the market, how that's affected refiner profitability in the United States and elsewhere, and how that will look in the future when those barrels return to the market, when Venezuelan barrels at some point return to the market. Now, we're really not just taking a look at biofuels, we're looking at it. We're also looking at, say, biodiesel's place in the world, and really if it makes sense to produce it in California or at the Gulf Coast. We're also plugged in with leaders in the Western Hemisphere's energy industry. For example, my colleagues just did a webinar with Sonia Savage, who is the Alberta Energy Minister. And Jim Mitchell and I just did an interview with Gregory John, who's the CEO of Four Peaks Business Development Canada. All things worth looking into.